So good evening, bankers. I hope you can clearly see me and hear my voice. If yes, just type Y in the chat section. So good evening, bankers. Okay. So I have checked from my end only. So it is audible as well as clearly visible. So welcome to the Adda 247 official channel for JAIIB CAB English medium. And today's agenda will be very simple, that we will be starting with unit number 8 for IE and IFS. Fine. Till unit 7th, as you might have revised also. So I would like to hear from you that how much you have revised, plus whatever difficulties you are facing, if any. So if you want to share, I am here to help you. As our team is focused for preparing quality content, we also expect some things from you, that you will make notes, you will revise those notes and ultimately crack this exam with us. Fine. So without any further ado, let's start. The topic for today is your unit number 8, that is foreign trade policy, foreign investments and economic development. Fine. Till now, till you can say till chapter number 7, we have completed till economic reforms. Now we will move on to the foreign investments or the foreign trade policy. Why this is important? Why this chapter is important? Because ultimately the economic reforms cannot be performed without the integration with the global economy. And this chapter will help us to understand in a better sense that how we are going to integrate our economy with the global markets. So we'll start with the basic foreign trade policy. What do you mean by foreign trade policy? What all are the characteristics of a foreign trade policy? And we will also see what are the types of foreign investments which we must focus on, like FDI or for that matter FII. Here you can see it is mentioned specifically in your syllabus, so it automatically becomes important. Plus we will see what all economic development are there. So I would suggest that whatever I am telling you in this particular class, do make notes, because it's a very crisp and concise content I will be telling you. And apart from this class, all you need to do is practice a lot, because ultimately questions you must know how to attempt them. And in that thing also, if you need any advice or any suggestion, then we are here to help you. Do drop your suggestions in the chat section as well. Next we will move on to FTP, the structural changes during 1990s. See, in 1990s there were certain changes. Specifically, if I say 1991, the LPG reforms, as we know, liberalization, privatization, globalization, that happened, which opened up the Indian economy or the Indian market for the global players, and they entered after this era only. We'll also see that what are the final points which are important for us when it comes to the FTP policy of 2015-20, plus the challenges to be addressed for the upcoming FTP, foreign trade policy of 2023. So till now we have seen that this policy is being implemented in a very diligent manner by the government, but ultimately the goal is to address all the shortcomings of all the previous FTPs as well. That is why there are talks for the implementation or the quick implementation of FTP 2023. FDI and FII, the foreign institutional investments or the investors, you can say, we will see the difference, which is very important. The table which I will be telling you, it is the most important topic of this class. Fine, this is very important. Along with that, these two topics are not that important or relevant for our class, or for that matter the subject, but again, if you have time, then you can just read them on your own. The economic development versus economic growth. What do you mean by development, and what is the difference between development and growth? Then importance of economic development as a dimension. Dimension to what? Dimension to the growth of your country. So basic agenda is, we will focus on what? We will focus on FTP. What is FTP? Then we will move on to the structural changes. What structural changes were there? What all schemes were there which we eliminated? And finally, we will see what all schemes are there in the foreign trade policy. Along with that, I want you to know the difference between FDI and FIIs. Okay. So very small session this will be of 1 hour. Yet small session, I would say. Okay, what is the foreign trade policy? What is the meaning of foreign trade policy? As the name suggests, I would say foreign trade policy refers to the economic policy that governs all the import as well as export activity of a particular nation. Fine. So it is not like your monetary policy, or for that matter your other policies which keep on changing in a quarterly manner or annual manner. It is a long-term policy. Okay, that is why the countries whosoever are engaged in formation of FTPs, they take their sweet time to calibrate all the important aspects of the economy which are required to be included while making the FTP, the foreign trade policy. It adds to the local economy's output and the nation's prosperity. That goes without saying. Without good, or I would say flawless FTP, the nation's prosperity cannot happen. That too in today's era where global integration is so frowned upon, you cannot just say that we will sit back and relax and FTP is not there in the consideration of our policy makers. No, it adds tremendously to the nation's prosperity, I would say. Fine. So FTP status from LPG till today. What was the status prior to that, prior to LPG, and what is the status today? We will have an overview. Prior to LPG, it is not that important, not that relevant for us. Why? Because the economy of India, the global economy, was very limited. It was not that it is open. It used to be considered as a closed economy back in the 80s or early 90s also. But after the LPG reforms that which happened in 1991, various changes were introduced, and the often lauded finance minister of ours, Mr. Manmohan Singh, he is known as the founder, or you can say he is known as the most responsible person for this LPG reform. So it has very high impact on the Indian economy, wherein today we are sitting and having you can say a sip of let's say Starbucks coffee, or for that matter we are driving the cars of Renault. Okay, so all these things are happening only because of one reform, that is LPG. Liberalization, privatization and globalization. Before that, it all was like that Indianization of everything. Fine, you cannot import or you cannot expect investment from the USA or for that matter other developing or developed countries. So prior to 91, the Indian economy was protected by high tariffs. Now try to understand the scenario. Once we were Okay. Once we were free from Britishers, the British rule ended in India. After that, the biggest challenge was to address all the small issues which our country was facing, be it the border issue with the neighboring countries, or for that matter, the trade deficit which we were facing, then the health condition which India was facing. So all these things took a lot of time to, from 1947 till 1990. It was a lot of time. I would say more than 40 years just passed like this only. After that, the economists and the Prime Minister himself, he wanted to have huge impact on our economy. Why? Because everybody else around us, in fact some of the neighboring partners also, they were indulging in the business activities from global market. Only India was left alone. So they sat down and they framed a policy which ultimately led to these reforms of LPG. And prior to that, high tariffs were there. People, or you can say the investors, were also scared prior to 91, and the traders, the Indian traders, were also scared to do business at a global level. Foreign investment was not permitted in India, in addition to the significant quantitative restrictions. Fine, quantitative restrictions were also there. Certain areas were there wherein you can invest, but there was a cap on the quantity. Following the 1991, the Indian government implemented the liberalized international trade strategy. Now this was the background. Now whatever is in the present, we will see via FTP 2015-20. FTP 2015-20, if you go back 8 years ago, I would say, it was implemented in a later stage in 2015, but the talks were on since 2013 or 14 only. Fine. And why it was so much talked upon? Because of the simple reason that the recession era of, if you remember, USA just ended in 2008. Fine. After that, the global economy, which was hit by that recession, it just started to get in line with the latest trend. So since then, it was pending, and ultimately in 2015-20, the government came up with this foreign trade policy. So it was launched in April 1, 2015, the FTP. And what was the basic agenda here? To promote the goods and services export. Fine. This was the sole agenda, to promote the goods as well as services, because we know that the recession hit marginally other sectors, but majorly your services sector. To promote its growth, the exports, FTP was launched in April 1, 2015. The new strategy had a specific emphasis on improving the ease of doing business. Ease of doing business is very much talked up in Indian market. Why? Because we as a nation are known for its red tapeism. Fine, red tapeism means what? It's nothing but huge pile of rules and regulations which inhibit us to deal with various countries, various nations. Fine. So in order to just scrap all those red tape measures and promote the ease of doing business, this policy was implemented in April 1, 2015. Base was this only. Fine. This was the base. These two reasons are the base. They form the basic or the foundational value of this foreign trade policy. But ultimate goal is always the number. Fine. That what all numbers do we need to increase the export? What all numbers should be there? What is the target for us to be achieved? So the aim was to increase India's merchandise and services exports from 465 billion to $900 billion. So this number you must remember, the $900 billion mark. This is very, very important for all of you. And I also want, if anybody who is watching this session, just tell me whether we have achieved this number or not, $900 million services and merchandise export. This number is really important because based on this number, based on this fact only, we will be entering into the foreign trade policy of 2023. So this number is very, very important, $900 billion. Okay, you can remember this one also, $465 billion, but the more relevant one is this. You must remember this. So do tell me if you are watching this live. Otherwise, comment in the your chat section if you are watching it in the recorded format. This is very important to know. That is why I'm asking you. I will be asking such questions in every session, so be prepared for that. And I expect all of you to reply as well. Salient features of FTP 2015-20. What all are the salient features? They are the simplification and merger of reward schemes. As I told you, that ease of doing business is one of the criteria because of which we modified our foreign trade policy. And ease of doing business can only be achieved if you have lesser and lesser regulations. Minimize the regulations and you will see increased interest of the investors. Fine. So we simplified all those schemes and merged them into one or two schemes. One for the merchandise sector, another one for the services sector. Boost to Make in India. In 2014-15, this was a major mission, or you can say the major vision of our Prime Minister to promote Make in India. And what better scheme to implement this Make in India initiative than the FTP. Fine. Foreign trade policy is the ultimate necessity if you want to promote Make in India. How? Because you want that like right now we use, let's say, shoes. Fine. All those global brands which we use today for shoes, they are not manufactured in India. Fine. They are not manufactured, only they are assembled. Fine. Keep this thing in mind. So what we want such plants or such shoes or such goods to be made in India specifically, and then we should export them as well. Next, e-commerce exports. Again, exports of e-commerce. This is the reality today. All the retail companies are moving towards e-commerce. So this is the new age, I would say, shopping thing also. Fine. Approved exporter system. Now, exporter system is nothing but one approval which you need to take whenever you apply as an exporter. Fine. So although here it is written approved exporter system, in most of the cases this is pre-approved. Fine. If you meet certain criteria which are mentioned in the FTP policy document, then it is pre-approved for you as an exporter. Skill development. Obviously government wants that the population, the people who are residing in India are citizens. They must be having certain skills, and those skills must be polished from time to time via various research and development programs. Fine. So all these research and development programs for trade in the manufacturing sector as well as your services sector, they lie in the skill development part of this particular scheme. Fine. So basically it's a very common, I would say, agenda which was there with the government, but how well they have implemented, that's what matters. Fine. So being bankers, you must know that whatever scheme is there in front of you, whether you as a banker tried to implement in your bank, like you have various schemes wherein various insurance schemes you must implement, you must be having some targets as well. So being a banker, you must be aware that what all other schemes are there in the market and whether they have achieved their target or not. Fine. These are interesting things. Let me just remind you, these are very, very interesting things once you develop an interest in them. So 5 schemes were there initially, which are today merged into one scheme, that is MEIS. Fine. This is the ultimate scheme for all these 5 schemes. And mark my words, when you will study these schemes in the policy document also, although the policy document is not part of our syllabus, But if you have the opportunity and time or interest for the policy document, then you will see that this focus product scheme and the focus market scheme, these are just the two same schemes for same approvals. Fine. So this was the level of red tapeism which was providing a roadblock for all the investments in India, foreign investments specifically. Market linked focus product scheme. Then agricultural infrastructure incentive scrip. Scrip is nothing but a tool, an instrument, I would say, which help you to invest, or for that matter to inhibit certain amount of taxes, or in order to save certain amount of taxes in the respective taxation system of whatever country you are investing. Then we have VKGUY, that is Vishesh Krishi Gram Udyog Yojana. This was specifically designed for the agricultural infrastructure incentive only. Only difference was that it was for Gram Udyog. Specifically, it was for the trading inside the villages, for rewarding the merchandise exports with different kind of duty scripts and conditions. Fine. So basically these are tokens. The scripts are tokens only, or you can say coupons also, which you can use to either pay the taxes or redeem the benefits. All these schemes have been merged into MEIS, as I have already told you, that is merchandise export from India scheme. Fine. MEIS. And there was no conditionality attached to the scripts issued under the scheme. So whatever the scripts are there, there are various scripts which you can use to avoid or to fulfill the taxation system, whatever the tax basis is there in a particular country. So there is no per se any script attached with this particular scheme MEIS. For SEIS there is, and SEIS is what? The served from India scheme has been replaced from services exports from India scheme, that is SEIS. And it is applied to service providers located inside India. Fine. Service providers are the entities which are providing various variety of services at your doorstep, or for that matter in the office space as well. Okay. So any doubt till now you can ask me. Fine. So I think everything is fine till now. Okay, so the all the scripts issued under MEIS and SEIS and the goods imported against these scripts are fully transferable. Now, as I was telling you, scripts are nothing but the tokens or coupons which you can use for various things, for various purposes. So here in these two schemes, these are fully transferable, and these scripts issued are used for what? They are used for the payment of your custom duties and payment for your excise duty, or for that matter payment of the service tax. Fine. Every tax or every taxation system has a particular beneficiary, or for that matter a particular target audience. So custom duty is for what? All the import for your goods. Fine. All the imports which are which involve goods, they are covered under the custom duty. And the domestic procurement of inputs, whatever procurement you will do domestically at at the level of India, then you have to pay certain excise duty, that is also fully transferable using the scripts. And your procurement of services, you will have to pay the service tax, which you can fully transfer using the scripts which are there in MEIS and SEIS. Fine. So don't get worried about what is scripts and how it will function. It is not that important for you. It's just a piece of information from my side that you must know that these scripts are used where you can use these scripts. Only three things you must remember: custom duty, excise duty, service tax. That's it. If you remember these three things, you are good to go. Okay. Now let's move on to the most important topic of today's class, that is foreign direct investment. Now what is foreign direct investment? You must be wondering that till now we have seen the foreign trade policy, that how the a certain policy is managing all the trade activities inside India, or for that matter any other country, with X or Y foreign country. Now the question arises that how we will be studying or how we will be monitoring all these trade activities. Fine, monitoring will be done using the foreign trade policy also, but on ground what all regulations are required, fine, what all regulations are there in a particular policy, that is also our area of concern. So on ground, the ground reality is foreign direct investment. Fine, how one foreign investor will invest in your country, that is governed by the foreign direct investment and FII also, which we will see in the subsequent slide. So FDI is nothing but the investment made in a country by some foreign investor, or you can say foreign investor or foreign entity, foreign organization, foreign companies, anything you name it, and they will be included in the FDI structure. Fine, often it's a company to control the ownership of an entity. Ownership is the key word here. You must remember that whenever there is a talk of ownership, you can directly say that yes, we are talking about FDI, foreign direct investment. It is a key engine of economic growth, employment generation. That is too common, we already know it. What I want you guys to remember is this, that in which domain does FDI falls, fine, in what all fields we can invest using the FDIs. We have allowed FDIs in certain sectors, and in certain sectors we have prohibited the investment using the FDIs. So wherever we have allowed, these are the sectors, that is defense, construction, broadcasting, civil aviation, plantation trade, private sector, banking, and the satellite installation and operation, credit information companies as well. So being banker, I hope that you must know what all CICs are there, which are present in India courtesy this FDI initiative. I want you guys to tell me the names of these CICs. Okay, for all of you who are watching this in the recorded format, do tell me the answer to this question in the chat section. So let's move. Net FDI has increased from $3.7 billion to $36.6 billion. This is a huge jump. If you see, it's almost 10 times, fine, 10 times in 15 years. So that is the you can say benefit of using the LPG reform. For no doubt LPG reforms were only one of the you can say one of the element of because of which we have such a humongous FDI, but ultimate criteria or ultimate reason for this growth is the government initiative, fine. So it has grown till $36.6 billion, which we have for 2021 till 22. For your information, 2023-24 data is out, but it is not comprehensive. That is why we have not included here. Okay, now let's move on to the routes of FDI. What all routes are there, which various corporations or for that matter companies can follow to come inside a country and trade. So one is automatic route. As the name suggests, there is no requirement for any type of approval. Fine, no prior approval is required in this type of route. Okay, approval basically from where you will take approval. Either you will take from the regulator, or for that matter the government. So any type of regulator or government is not participating in the approval criteria. Only catch here is that in automatic route certain shares must be aligned to the RBI. Fine. You must, the FDI investors must issue certain shares of their company or their entity to RBI. This is the only caveat here which you must remember. And the investor must follow a two-stage reporting process. There is two-stage reporting process. That is, two-stage means first they will move on with all the policy documents that we want to trade in India, and in line with the FDI policy of your country, we hereby submit all the application and documents. And within 30 days of that, fine, from, let's say, if today is 10th, then by 9th of January, you must have a concrete evidence that I have submitted all the documents which are required to RBI, fine, to the concerned department of RBI. RBI does not give the approval, but the documents should be submitted to the respective department of the RBI only. Second, upon the issue of the shares, why we are delivering the documents first to RBI? In order to fulfill this point, that is issuing the share to the RBI. Once the shares are approved and they have been issued, you need to submit the required documentation with the Foreign Exchange Department and the regional office concerned of the RBI. Supposingly you are interested in opening up a plant in Gujarat, so Ahmedabad is the location for RBI where you must submit all the supporting documents. Fine. So this is the basic structure which you must remember for various routes of FDI, specifically for automatic route. Next we will move on to the government route. As the name suggests, government route is nothing but you need prior approval of the government. Fine. All those activities where you need prior approval of the government to invest in India, that is known as the government route. So foreign investment in activities not covered by the automatic route requires prior government permission, and it is reviewed by the administrative ministries or the departments. Fine. The proposals involving a total foreign equity infusion of more than rupees 5 crore require clearance from the Cabinet Committee on Economic Affairs. This point is very important. What is the limit beyond which you require the clearance from the CCEA? So the limit is 5 crore. So 5 CR and beyond, you must have the prior approval of CCA. Fine. FDI from Pakistan is also placed under the government route. So basically, if you will study it in greater detail, the government route is nothing but specifically mentioned for all those nations with which we have hostile relations, or with which our friendly neighbors have hostile relations, or for that matter, all those nations which are not politically or for that matter geographically that sustainable. Fine. If there is certain war in that particular country, let's say in Syria, the political situation is not that well versed right now. Similarly, if certain geographical condition is not favoring the import in our country, then also we can lay down various regulations for those particular countries. So this is all about the government route. Next we will move on to the types of FD. What all types are there for your FDI? That is greenfield, brownfield and joint venture. Joint venture, basically it means that the foreign company and the local company join together and they share investment, technology and so on. Fine. All the technology profits, or for that matter all the investments which one country has done in the other country, they will be sharing certain things. They will be sharing the, let's say, profit, or for that matter sharing the their experiences with the country. All these things will culminate into the joint venture. For example, Hero Honda, wherein Hero is one of the Indian company, and Honda is a Japanese brand. Fine. So they have collaborated for various things like Hero Motor Corp is there. Then for that matter, your Hero Capital Securities are also there. So various joint ventures they have opened. Greenfield is basically Greenfield FDI is like, you must know you can know the greenfield, or you can basically understand the greenfield FDIs using the example of Pepsi. Okay, Pepsi is a multinational brand, we know, but if Pepsi is operating in India, then it is known as Pepsi India. Fine. The labels, or you can say the brand, endorses Pepsi, but ultimately it is having a subsidiary in India. So Pepsi India is operating as a subsidiary for Pepsi brand. Fine. This type of investment or this type of FDI is known as your greenfield FDI. See, Pepsi was doing really great in USA, in the US market, but to capture the Indian market, it did what? It overthrew the Campa, if you remember. Fine. So Campa was the only brand in initial days in India which was serving the beverages that Pepsi also wanted, or Coca-Cola also wanted. So what they did, they captured the market of Campa, and for that they needed the machinery, the input, the staff, the advertisement, everything was required. So they started it from the scratch in India, although they were doing really well in USA. Fine. So such type of investments or such types of FDI are known as your greenfield. Brownfield is nothing but a type of FDI wherein multinational corporation buy the stocks in the established firm in host country. Now, I hope you know Ranbaxy India, one of the major pharma corporations in India, Ranbaxy. So, if let's suppose Sankyo of Japan, another company in Japan only, Daiichi Sankyo is the name, if they acquire certain stocks of Ranbaxy India, then we will say that this type of FDI is known as brownfield FDI. Okay, so where stocks are involved, it is brownfield. Where subsidiary is involved, then we will say it is the greenfield investment. Now, what is the difference between FDI and FII? This is again very important table. I want you to remember each and every point here. FDI basically is, we are talking about FDI only, na? So FDI is nothing but a type of direct investment. Fine. Everybody talks about FDI, that FDI is very important for a nation's progress. FDI is important for the goods and services. FDI promotes the production, it promotes the consumption, and in certain countries it is known as the consumption tool as well. So FDI is nothing but certain nations, they want to invest in a particular host country, and they are investing using all the machinery, all the inputs, all the manpower, all following all the rules and regulations, and they are here to stay. Fine. Long-term investment is the FDI. It has long-term perspective. But when I talk about FII, it is more like trading in the securities market. Fine. So it goes into the hedge funds, short-term equities and securities, etc. So as you know that all these are what? These are the short-term perspectives via which FIIs go in the host country. FDI basically, it contributes to the GDP of the country. Fine. When goods and services will be produced, when they will be promoted and consumed within that host country, it will ultimately boost the economy via the increased GDP of that particular host nation. But in FII, it is not mandatory. Fine. It can happen, but to a very limited extent. How? Supposingly the FIIs are paying certain taxes in that particular country, like capital gain tax in India. So via this thing, government can extract certain revenue, but not up to the level of your GDP or FDI. Fine. Next we have the nature of investment. FDI is stable in nature. Fine. It is the most stable of FPIs and FIIs or FDIs. It is the most stable one, and there is hardly any threat of capital flight. But when I talk about FIIs, you must have seen in the news that whenever the stock market crashes, one of the reason are these FIIs. Fine. Because when they see that certain company is making loss, or it might go to lose certain value in let's say particular week, then what they do, they just sell out everything and shift towards whatever they feel is more profitable. So chance of capital flight is very, very high in the case of FII. That is why it is also known as your hot money. Hot money means which you cannot handle. Okay, you cannot handle hot money, right? That is why FII is also known as your hot money. FDI basically depends upon the macroeconomic profile of the host nation and the economic and political stability as well. If, as I told you, a country is there, let's say India wants to invest in a country, so what do you think? Host country would be USA or Syria? Definitely it will be USA. Fine. Hands down it will be USA. Why? Because it is economically and politically more stable, or in today's world, so it's the most stable when compared to any other developed nation. Syria is having turmoil in political as well as economic condition as well. Fine. FII basically they do not see world as brick and mortar, they just see the profitability. Only profitability is there. That is why they are only capital intensive. They see that in which country or in which company of the host country I will generate more capital, they will invest there only. Fine. There are three types of FDIs: greenfield, brownfield and joint ventures, which we have seen. And here the hot money concept you must remember for FIIs. Fine. So this was it for today's lecture. Now let's solve some questions. I want participation from everybody because these questions are not that hard. They are of easy level. Fine. I won't even categorize them as moderate. These questions are only easy. Fine. These are easy questions. So the first question says that an Indian firm that receives FDI through automatic route must follow which among the following? So we are talking about the automatic route here. Automatic route and government route, we have seen two routes, out of which automatic route is asked. The keyword was in automatic route there is no requirement of any approval. Fine. So first statement says that they need to report to the Foreign Exchange Department and regional office or the concerned RBI. Yes, this is true. We have seen that with the example that supposedly Gujarat is the region where USA wants to, a firm of USA wants to invest, then they must have approval from your RBI office at Ahmedabad. Issuing shares to RBI, yes, the two-step mechanism which we have seen. Then take the permission of CCA. No, this is not important, or this is not mentioned for your automatic route. This is mentioned for your government route. So option 3 will be the wrong statement here. Correct option will be option C, that is 1 and 2 only. Fine. Next we have the scripts issued under the MEIS, that is Merchandise India scheme, can be used for which of the following? For making payments for which of the following? CGST, IGST, customs duty or SGST? Quickly just reply. These are very, very simple questions. Correct option is customs duty. Fine. Customs duty is the right answer. Option C. Yeah. Which is known as hot money? Again, it is the FII. So these types of questions are very easy. and you must also practice such easy questions as well, because sometimes what happens is in the exam these questions are like low hanging fruits. Fine, we tend to miss the marks. Let's say we are aiming towards 54, fine, and we are just left at what, 49 only. So these are the questions which will make 49 as 54, 1 mark, very small questions. Fine, limited time, extreme pressure of the exam, these type of questions will help you. So do not ignore such questions as well. Okay, option A is the right answer. Yes. So this was it for this particular lecture. I hope you enjoyed the lecture, and if you like the session, so do check it out. Do check it. Do check it. Is there an issue? Okay. If you like the session, I would recommend you to quickly provide a feedback. Fine. Your feedback will help me to evaluate my performance, because ultimately my message or my lecture deliverables must relate with your situation, whatever you want from me. So your feedback is very important. One piece of information for all of you is that you should visit our website, that is www.adda247.com, and do not forget to download our application on Google Play as well as Apple App Store. Okay, you are watching this session in English medium channel only, so this piece of information is not relevant for you. Okay, do subscribe our channel if you like the content which we are providing here. Okay, so this was it. If you have any doubt, any sort of doubt you have, I am here to help you. You can ask me right now. Otherwise, we'll end the session. Okay, so one more thing I want to share. If you are planning to purchase any course, any kind of course according to your need for JAIIB examination, then you can get more discount if you apply this code, that is Y1003. Fine. Once you select the course and you come to the checkout section, after that you can apply the coupon code here. What it will do, it will give you additional discount, and you can see the price drop here once you apply this particular code. So it will be beneficial for you. Fine, every penny saved is every penny earned, I would say. Fine, so this was it for the session. If you have any query, you can drop your questions in the comment section of this particular video, and I will help you there also. Fine, so we'll meet in